right. Hey, everybody. It's Dr. Nicole Bonder with Thrive Chiropractic Coaching, and we have an amazing webinar for you guys today. We're here with my good friend, Matt Mady, and he's not only my great friend for many years, he's been my patient, and he also does all things insurance for me. And if you guys are about to or thinking about to be opening a practice, this is definitely a webinar that you do not want to miss. Let's see, we have some more people coming in. Let me see if I can do this. Amazing. Oh, it's James. Amazing. Alrighty. Hey, James. Hopefully you can hear us. Good afternoon. Alrighty. So if it's okay with you guys, I just want to share my personal experience when I was opening my practice. And then we're going to just pick Matt's brain on just all things insurance and everything that's necessary to open your practice. So when I first opened my practice over 20 years ago, I was, total transparency, I was not a huge business insurance advocate. I knew nothing about it. I didn't even know what it meant to have liability insurance. I didn't know what it meant to have business insurance. I didn't know what it meant to have prime insurance or disability insurance or any of the insurances that Matt is going to touch on today. And, you know, when you're young and you're opening a practice, I think we all have this sense of being, you know, just powerful and mighty and nothing's going to happen to me kind of attitude. And I had that attitude. I was like, nothing's going to go wrong. What could possibly go wrong? Well, I have a personal story that I want to share with you that is a true story. It's really spicy. So I'm going to throw that out there right now. It's a pretty spicy story, but I'm going to share it with you because I think that it's important. So years ago, I had, Matt, I think you know this. I think you know this story because I think you were the first person that I called. So years ago, I had an associate chiropractor working in my office, and he was a great chiropractor, but he was not so great with the staff and with the team. And so what ended up happening is this chiropractor ended up dating one of my CAs. John's face is like, this is not going to go down a very good road. And I didn't know about it, of course, because, you know, as business owners, we're busy, right? There's a lot on our plates. There's, you know, we're running from task to task to task. And eventually it was brought to my attention by other team members. So I addressed it with the associate and I was like, dude, you're a doctor. Like, this is against our office policy. This cannot happen, et cetera, et cetera. So as far as I knew, everything was cut off. And then a couple months go by and this CA comes to me and she's like, Dr. Nicole, I'm pregnant. Now, here's the spicy part. The spicy part is that she was also married. So now we have this situation. And what ended up happening was like 3 months into her pregnancy, she actually ended up quitting in the practice. And it was like, it didn't seem like any big deal. Like we didn't have a huge blowout. There was no arguments. It was just along the lines of, hey, I'm pregnant. I need to get some things organized for my family. This is not a good fit for me anymore. I'm giving you my 2 weeks notice. And that was it. And it was like, you know what? Totally understand. I get it. And she gave her 2 weeks notice. She put her 2 weeks in and I didn't hear from her. So thought everything was fine. 6 months go down the line and I receive a letter from an attorney's office. And the letter stated that, that she was fired because she was pregnant and that if I didn't pay her $40,000, that she would take legal action against me. So I'm going to make a really long story short. Basically, I obviously had to hire all these attorneys and there was all these legal fees. Long story short, I never ended up having to pay her a dime or a penny, right? But the point of the story is this, is had I not had the proper insurance in place, I would have had tens of thousands of dollars of legal fees that I would have been responsible for a total made up lie that an employee made up. Does that make sense, you guys? And so as I'm opening practices with new chiropractors and even chiropractors who have been in practice for a long time, one of the holes that I'm finding is that most people don't have a clue of what types of insurance they're supposed to have in order to cover their butts, in order to cover them in a case like I had. You know, you're totally innocent, you really do nothing wrong. And what my biggest aha lesson was, sometimes you just can't control the circumstances that happen around you. And that's where Matt comes in, because Matt, why don't you go ahead, tell everybody about, who you are and what you do.
Yeah, thank you. And thanks everybody for your time today, as well as having me here. As Nicole had mentioned, my name is Matt Mady. I've been in the insurance industry right out of college. I finished up at St. Joe's in the Philadelphia area, and I've been doing this now for just over 20 years. So time flies when you're having fun. It may be a shock to all of you, but I did not grow up aspiring to be an insurance salesman or have an insurance business. Um, Maybe there's some commonalities with some of you on the phone, but I was an athlete growing up. I wanted to be a professional athlete, but that just didn't work out. So when I graduated, nobody would give me a sales job or anything because I didn't have sales experience. And the summer before I had finished up, I had taken an internship with New York Life in Philadelphia and gotten my life and health license. So I was always entrepreneurial. And when I got done, I said, you know what? No one's giving me a shot. Maybe this is God telling me, hey, I should go down this path and kind of build a book in the insurance industry. So, good start fresh out of college, making no money my first year, where I think less than 9% even make it past the first year, just because you're basically eating what you kill, going out knocking on doors. So here I am 20 years later, predominantly work with businesses and business owners like yourself. The company that I'm with, that I have my book of business underneath, is World Insurance. If you can see um, my little logo here. World has been around for close to 15 years. Our headquarters are in Island, New Jersey. We're up in the business in the Metro Park Business District there. We have our own building. And they provide great resources for us. So, as I mentioned earlier, I do have clients all across the country. Doesn't matter what state, what industry somebody is in. We have great programs, great resources, and I'm what's called a broker. So I don't represent a particular company. I'm not what's called a captive agent. I don't push a certain product, company, or anything on my clients. I work and partner on behalf of them, understand their needs, and then it's my job in partnering with them to go out to the marketplace and try to find solutions to best fit their business. During my career, not everybody always takes me up on all of my recommendations, but it's my job as the insurance liaison and partner to educate you on everything insurance related and what's out there, what you should be aware of, what liability and risk exposures there are based off your business. You may say, hey, Matt, you know what? Based off cost, based off exposure, I'm willing to self-insure that risk for now. Maybe we look at it in the future, but at least, I'm covering my behind and making you aware of what's out there, so no one else comes knocking on the door saying, hey, are you aware of this? And well, no, Matt didn't tell me about it. So that's just a quick background on me. Nicole, I'll turn it back to you real quick. I'm not sure, where you want to go from here.
Yeah, so, well, thank you for that awesome intro. So let's jump right in. So most of the people that you're talking to, Matt, on this call and that will be watching this video are people who are aspiring to open a chiropractic practice or have newly opened a chiropractic practice. So let's start with the basics. Like, what is the basic insurance that you absolutely have to open a business?
Great question. And I work with a lot of folks in your space, in the healthcare, chiropractic field, physical therapy. So very familiar with the coverages and the exposures that exist for you guys. But insurance 101, really, no matter what business you're in, is your general liability insurance, right? So general liability insurance covers you for obviously any bodily injury, right, on or around premises, or any property damage that you may cause to somebody else's property. Typical limits and I should say minimum limits, we don't let anybody, regardless of the industry, walk out of the door with less than 1 million per occurrence, 2 million aggregate on an annual basis. So those are your base limits for general liability. And again, that follows you. Second to
Now,
that
Matt,
would, oh, go ahead.
with general liability, now, okay, ignorant question. Is that a law? Like, are we required by law to hold, like, you know how by law we're required to hold a certain amount of auto insurance? Are we required by law to hold a certain amount of general liability insurance?
I would say in most cases, yes. I mean, again, it's insurance 101. So most companies would not be able to do business unless they had some form or proof of having general liability insurance at a
Okay,
minimum, right? Whether or not you're having clients come in the door or you have an RFP out to win a certain proposal or a certain bid for a certain piece of business, right? You need to have some type of proof of general liability coverage. And then based off that, based off what you do, there might be other stipulations where coverage may be required in certain other areas. And I run across this a lot where sometimes it doesn't make sense, but because they're requiring it, you have to get it in place. Not
gotcha.
so much in your industry, but yeah, good question. I mean, you basically need to have general liability insurance.
Okay, and that's true no matter, that's not just because we're doctors, that's true because like for any industry that a person is in, any
Any
business.
business, like I said before, I work with a lot of different industries. I look at it like this. If you're setting up an LLC tomorrow, the next thing is go get yourself general liability insurance. And depending on what business you're in, right, with you guys being in chiropractic, it might be required for licensure, right? And to keep up
Mhm.
with continuing education credits and things like that. Like I know for my business, I have to have errors and omissions insurance. So I must keep up with that on an annual basis personally, or else it'll jeopardize my insurance licensure.
Gotcha, gotcha.
Um,
All right, what's
oh, I'm
next?
sorry. I was going to say, yeah. So second to that would be any form of property insurance, no matter where you are in the country, right? So if you are going to own your building, you'll have to get property insurance that covers the replacement cost of the building. If you're leasing the building, depending on what type of a lease you have, if you have a triple net lease, the landlord may require you, even though you don't own the building, to cover the building, which obviously that would increase your premium on the property coverage. So you have the building coverage, and then what's most common, regardless of whether you own or lease the building or the property that you're occupying, is your business personal property. So business personal property, an easy analogy is that's everything that you own inside the premises. If you were to flip the building upside down, anything that's not permanently attached that falls to the ground, right? So you'll want to figure out, hey, what's my business personal property limit? And when you're first starting out, it might not be much, but you may add equipment. And if you add equipment and different pieces of business personal property during the course of the year, that's something that you can always endorse the policy during the course of the year, or something that whomever you're working with agent wise, like myself, at renewal, they should be doing due diligence, sending you the renewal quotes, making sure nothing's changed with the exposures of the business, including property. Hey, do we need to update property? Have you added any new pieces of equipment this year that you want blanket coverage for? Did you buy a pretty a larger or a more expensive piece of equipment that we have to specifically schedule separately outside the blanket limit on the policy? So
Mhm.
those are kind of the two main pieces. You have your general liability and property coverage. And because chiropractic and what you guys do is really seen from an underwriting standpoint with insurance as like an office setting job, you
Mhm.
would you would most likely bind that with a standard market carrier, and it would be in the form of a business owner policy or a BOP policy that we call for short. So that's kind of a policy that includes both your general liability and property in one. So you're
Okay.
not buying like a separate policy for each. It's kind of wrapped into one policy.
Okay. Do you typically recommend that we bundle policies like that? Like, is it
Well,
good to
and
do
and
that?
so with a bot policy, it's actually if you can get coverage on a business owner policy form, it's best to do so. There are certain
Okay.
industries, for example, like take a general contractor, for example. We write a lot in the construction industry as well. They're not going to get a business owner policy, right? The exposure is too unique and different. So they're going to want to get a separate, they'll only be able to write it on a general liability form and then a separate property form in most cases. The business owner policy is good because it looks to include coverage. So
Okay.
if you're looking at a package policy, which is a separate, separate policies compared to a business owner policy, the business owner policy has a lot of more throw-in coverages in there, which are
Okay.
good. And in most cases, it's not auditable. So every year at renewal, it's you don't have to go through an audit.
Gotcha. Gotcha. And one of the points that I want to make too here is you guys, that was a great point that Matt made in that, all through when I coach people on opening a practice, one of the things that I teach you how to do is I teach you how to build relationships with people like Matt who specialize in different areas like accounting and banking and insurance and attorneys and things like that, right? So if you go through the Jumpstart program, that's going to be your not like one of your number one aha moments, aha things that you learn is how to build these types of relationships with people. And Matt made a really good point that is separate from insurance, and that is how important that relationship is. Because when you have a person like Matt on your team, that's how you're going to know that you're staying current and up to date with your needs. So he's totally right. Like in the beginning, you're going to have less equipment, right? Because we're going to start with lower overhead. But as you continue to grow, number one is as you grow, you have more liability because you're going to be growing from maybe seeing, 5 people in a day to seeing 100 people in a day, right? So just by your growth, you're going to have different types of liability, but you're also going to have different types of liability with your with your equipment and things that you're bringing into the practice. And so I think that's such a good point that Matt made is whether you choose to use Matt. I'm going to give you guys, by the way, his contact information. Whether you were to choose to use Matt or somebody else, just make sure that that person you're having this continued relationship with. Like I text Matt. Matt, I don't even know how many times a month do I text you. I
Uh,
mean, it's a constant back and
yeah,
forth relationship.
and it's all good. I mean, I work with all my clients in that same fashion. It's just like I said, it is a true partnership, and that's what I do value and love about what I do is I'm at a point in my career where I can work with the folks that I want to, like Nicole, and we have good relationships where again, she can text me, she knows I'm on it. I have a great team behind me. Although I may seem like a generalist, we have specific people at World that work in those specific industries, right? So like we have a self-storage industry, we have cannabis, we have aviation, transportation. So there's really isn't an industry that we can't write, and we have the folks behind us that are just in the trenches all day long within that specific industry. So it's nice. I mean, I don't claim to know all the answers, but I have good folks behind me to where, hey, if I need to find the answer, I can go do that. And I
Gotcha.
didn't mention initially too, because with a lot of times in working with folks like yourself who are, doctors and have your licenses, professional liability is also a 101, right? With your field. We do write professional liability, E&O, and malpractice insurance.
Mhm.
Happy to take a look at that for you if you want, but a lot of times you might be able to get it at a significant discount through like an association, like a chiropractor association or something
Mhm.
like that. But I figured I would throw that out there because that obviously you guys definitely need that to keep up with your licenses.
Yeah. Matt, that's what I love. That's why I work with you because you're so dang honest, and I love that about you.
I try. I try. My
Uh,
mom told me at a young age I was a bad liar, so I gave that up.
Gotcha. All right, so now let's go on to the next level of insurance. So, what are some types of insurance? So I also have another quick story. In 2013, Matt, I think you know this story. Do you remember when I walked into my office first thing in the morning and I was hijacked by cyber thieves?
Yes, I
Do you
believe.
re
Yep.
do you remember that? So yeah, so I walked into my office and somehow these cyber thieves got into my space and they hijacked everything. They hijacked everything and they held all of my information, my patient information. They held it for ransom.
Yep.
And so I know, Matt, what I want you to share with us now, Matt, is what are some insurances that you don't absolutely need to function, but are like really good to get, like that crime protection insurance and things like that.
Yeah, so a lot of those ancillary coverages, and again, within that business owner policy form, if you actually looked at that, you're going to see a lot of stuff on there where you might be like, well, I don't need that. Can you take that off? Or, hey, I want more, I want more of a higher limit of this coverage. Can I get that? That stuff is already baked in there, like I said. If you need additional limits, that's where you would get a separate policy that provides broader coverage. So to Nicole's point, um, what's always included, a lot of times it is a minimum limit, is a crime and or theft policy. So that obviously covers you for like employee dishonesty, employee theft. It does cover you with some cyber type attacks if it is direct to your location. There's some gray area there, but in most cases, when it's cyber related, it's always prudent to get a cyber insurance policy. Some business owner policies, when I write a BOP policy, there are two main areas that I always ask to get just a base limit on, just to get something, and it's
Mhm.
cyber. And I always ask for at least 50 to maybe $100,000 if I can get it on the BOP, and employment practices liability. And we'll get into that in a little bit. But cyber protection, if that's important, which I feel like it should be for every business, no matter what stage you're in this day and age, everybody is subject to a cyber attack. A separate cyber policy with higher limits, let's call it 250,000, $500,000, that covers you for both first party data, so your data as a business owner that could be compromised, as well
Mhm.
as third party, any patient or customer data, right, that could be compromised. Now, all of a sudden, if patient or any of that data is compromised, you could have, if you have 100 patients, you could potentially have 100 lawsuits, right?
Right.
So the cyber policy gives you broader coverage to prevent against cyber type attacks, ransomware, anything like that, both first and third party.
Great. I'm so glad that you touched on that because I think that's super important. And like you said, shoot, man, we have hundreds of patients, hundreds, into
And
thousands of patient, tens of in our system, we have tens of thousands of patients that have data in our system.
yeah, and which is good. I hear a lot of times, hey, our contact management system, or maybe our POS system or payroll provider or whomever, they give us that coverage. And I say,
Hmm.
okay, well, make sure you understand it, and they're clearly explaining it to you, because I'm sure they do give you some type of coverage, but it's probably to protect their behinds, not yours, right?
Yeah,
So,
right.
just make sure, because you could talk to any attorney. The two biggest areas of claims over easily the last 5, if not 10 years, are cyber related. I mean, I know just internally at World, at least a couple times a week, we get from our IT department, they try to throw us off guard because we're all so busy. We get phishing emails from them that we have to tag phishing, not phishing. So they're always trying to keep us on our toes because
Oh my God.
it's out there. And one employee, we have what, over 3,000 now, just one employee in a busy day could click on something, not read
Right.
the email domain, and all of a sudden it's a disaster for everybody. So
That's what
cyber's a
happened to me.
yeah. So cyber's
They,
a big one. And again, it's always important, like I said, that bot policy when you're starting out, if, hey, just funds wise, I can't maybe afford a separate cyber policy that includes first, third party data. Make sure you have some kind of a limit, the max limit that carrier will allow you to put on that business owner policy. And then the
Mhm.
second one where we see a ton of claims, and the reason being, and Nicole, you touched on this earlier too, something doesn't actually have to happen for somebody to claim it happened, and that's with
Mhm.
employment related, right? So employment practices liability insurance, or EPLI for short, that protects you from anything employment related. So wrongful termination, failure to promote, sexual harassment, any type of discrimination, both first and third party. So first
Mhm.
party, you to an employee or employee to employee, third party, whether it's a patient, client to, patient to patient, client to client, what have you.
Mhm.
It's very, very important. Those anymore, it's a money grab situation. I always
Mhm.
recommend that more than any other coverage, to get a separate policy with, like, if you can, $500,000 or $1 million limit on it, because I mean, just think about it, right? A wrongful termination. I have one client last year that they let somebody go. It was amicable, similar situation. They got a lawsuit saying wrongful termination, and she wanted $750,000. So obviously they're not going to pay that, right? But then
Right.
that gets tied up in the litigation. Now, the nice thing is this client did have a separate EPLI policy. So what's nice there is a lot of times they have a high retention rate, which is a deductible, which the deductible is what you pay before the coverage obviously kicks in. So
Mhm.
with EPLI, a lot of times there's a higher retention limit, 5, 10, 15, $20,000. But you're looking at those for those really big claims, right? I
Mhm.
mean, a lot of times, unfortunately, if you got to pay somebody 10 to 15 grand just to go away and be quiet, you end up doing that and don't submit the claim, because then that's going to look bad on your claims history.
Right.
Uh, but EPLI is something that I would definitely consider and look at, because yeah, it's a big one, and we see it all the time.
I would agree, Matt. The statement you made earlier was so powerful. I think you said, like, just because just because something doesn't happen doesn't mean somebody can't say that it happened.
Yep, yep. And most of the carriers now, they're proactive. So if you get a separate standalone EPLI policy, they have a claims mitigation team that help you. So if you have, I had a client a couple of years ago that they had the potential, hey, we had to let somebody go. I don't know if anything could happen, what could happen. They were able
Mm.
to call that carrier's EPLI team, and they have attorneys on staff there too. They kind of walk them through, hey, I don't know necessarily from an HR standpoint, but here's a couple processes you could take to hopefully mitigate a claim from coming in the mail a couple months down the road. So what's nice is we're seeing more proactive solutions coming from these carriers. They're not just taking your money and giving you an insurance policy, right? Hey, how can we
Right.
help you guys out with crafting some language and some solutions around mitigating risk? Because you guys don't want to claim, we don't want to claim as your agent, and the carriers don't want one either. But they're bound to happen. It's the law of large numbers, but it's nice that they have certain proactive measures in place to assist clients and business owners like yourself.
Amazing. And that one that a lot of people ask me, a lot of chiros ask me about is, should I get disability coverage in case my hands get injured?
Yes. So I would never say no, don't get insurance, because if I told you not to get coverage, the next day something would happen and you would need it. Um,
Right.
So yes, I would always recommend. I mean, obviously, your biggest, all of us, right? We're in prime revenue and generating years. So your biggest asset right now is your ability to make money for yourself, for your family, your loved ones, what have you. And yes, disability insurance protects against that. So in most cases, and that's long-term disability, right? Depending on the state that you're in, like New Jersey, for example, it's state short-term disability is mandated by the state. So if you're in New Jersey and you set up a business, you are required by law to offer short-term disability through the state. You can set it up privately, which I do benefits as well and benefit planning. But short-term disability, basically, if you can't perform your daily tasks, right? If you're disabled, usually a waiting period is 2 weeks. You then can collect on a short-term disability, right? Short-term disability typically will then run 26 weeks. If you're disabled beyond 26 weeks, that's where a long-term disability policy would come into play. Now, as business owners, you can do this a couple of different ways, right? You could get yourself your own personal long-term disability policy. Um, Typically, that will pay better than a group disability policy. And when I mean group, I mean, let's say you had at a minimum 2 full-time W-2 employees and you offered benefits, you could get a long-term disability on a group basis that anybody that's full-time eligible could enroll in. But in general, long-term disability, if you structure the policy correctly, should pay you to age, what do they say retirement age is now, 67? So if you are disabled beyond 26 weeks, beyond the short-term disability, that's when you would file the claim with the long-term disability carrier, and they would pay you in most cases up to 70% of your take-home income, right? No one's going to pay you 100% because what would be the point of trying to go back to work then, right? So most long-term disability policies will pay you up to 70% max, and God forbid you're disabled, for the remainder and can't use your hands and do what you love to do. That would pay you out to age 67.
Gotcha. Oh gosh, there's a lot. Are you
And
guys
then
learning a lot?
workers' comp, a segue would be workers' comp insurance. So you're also required
Okay.
by state law to have workers' comp insurance. Um, as soon as you have one W-2 employee on payroll, you would set up workers' comp. Workers' comp, there's really no negotiation in the rate in most cases. A lot of times, if you can get your general liability and property, like through your business owner policy, if you can get that carrier to write workers' comp, just so you can kind of keep it under one umbrella with the same carrier, it works out well. But obviously, it's based off the class code, and then the rate per $100 of payroll is how you come up with what your premium is. And I believe with your industry, premiums aren't, it's a fairly low rate compared to other industries out there. But
Yeah.
workers' comp, you're going to need to get right away. Depending on how you set your business up, if you are an LLC, as an owner, you can choose to include or exclude yourself in the workers' comp as an owner. If you're set up as like an S corp or any other business entity, you must be included in workers' comp. Um, we do have a lot of folks that are set up as LLCs that sometimes they do exclude themselves just because A, they're like, I'm not going to submit a claim against my own company unless it's catastrophic. B, workers' comp typically doesn't pay that well anyway, and it's only for a certain amount of time. So in that case, Nicole, I always recommend if a business owner does exclude themselves from workers' comp, that's when I really try, if they need a little bit more nudging, to consider that disability policy, right?
Gotcha. That make
And in most cases, you have health insurance too, right? So,
Yeah, that makes a lot of sense, Matt, for sure. And I will say, in my experience, and this is a whole nother topic for another time, but in my experience, most accountants and tax attorneys kind of direct chiropractors to open up that S corp.
yep.
So you're required to have it on yourself anyway.
Yeah, which again, it's not at the end of the day for what you guys do, the rate per 100 of payroll, it's not,
It's
it's
not
not,
too
it's
bad.
not a lot anyway. There are some where it's, you could be looking at a 15 to $20 rate, per 100 of payroll, like a
Yeah,
carpentry class code in the construction industry. So for some of those guys, they're like, I'm just overseeing the job anyway. I'm not out there swinging a hammer. I'll have a disability policy. I have health insurance, and I'll exclude myself, since I'm set up as an LLC. Um,
right.
but yeah, workers' comp. And then we didn't talk about umbrella coverage. So I'm sure everybody's
That was
heard
going
of
to be my next question. Tell
umbrella.
them what an umbrella coverage is.
So umbrella, you can look at it as the umbrella. It's the same thing if you have personal insurances, if you have home insurance and personal auto insurance. The umbrella insurance just extends liability insurance over and above those base policies. So if you have, 1 million per occurrence, 2 million aggregate limit on your general liability policy, maybe for your malpractice, you have $1 million limit. The umbrella would, if you have $1 million, $2 million umbrella, it would be extended above those base limits. So God forbid if, let's say from a general liability standpoint, right? A patient's walking in, it's icy outside, they slip and fall, bodily injury, right? So that claim, you're pulled into the lawsuit as the owner, the landlord is. Um, if you're deemed at fault because you didn't put salt out or whatever the case is, and that exceeds that 1 million per occurrence, that's where that additional umbrella would come in and help you out with that claim.
Yeah. And I believe also, correct me if I'm wrong, but I have umbrella and I love it because umbrella is typically very cheap. It's like not very expensive
Yep.
at all. And it also covers us like in I believe in malpractice situations as well.
Yeah, you just have to make sure if so, if you're working with a broker like myself that represents a number of different companies that can truly shop the market for you, if let's say the umbrella carrier is different from your BOP policy and your workers' comp, you just have to really make sure that that umbrella carrier has those other policies listed as underlying policies, right? So you want to make sure on the umbrella, on the declaration page of the policy, they list your general liability policy, they list your malpractice or professional and any other underlying coverages, your workers' comp. If you have a commercial auto policy, any commercial auto policy should have a minimum of $1 million limit. Commercial auto, typically you won't need unless you have a commercially owned vehicle, right?
Hmm.
So,
So that would be in the
depending
case
on
of like a mobile chiropractor.
right, or let's say as a business you're like, hey, I want to yeah, probably in the same breath, Nicole. Let's say, hey, I want to get some type of a transit van where maybe for some older patients who can't get here, where we have a driver that goes and picks them up and brings them so that they can get treatment or something like that, right?
Mhm.
Obviously that would be owned by your LLC or S corp. You would get commercial auto insurance for that, and that could be an underlying coverage for your umbrella policy as well. If you don't need a commercial auto policy because you don't have a commercially owned vehicle that's registered to the company, you want to make sure that the business owner policy that you have what's called hired non-owned auto, it's HNOA for short. So that usually is very, very cheap, maybe a couple $100 if that to put on your business owner policy. So that will cover you and cover employees using their own vehicles or any higher non-owned autos on company time,
Oh,
right? So
wow.
let's say your receptionist or one of your employees goes out for a lunch break. They're on company time, technically on a lunch break, as well as going to and from work. If they get into an accident, that's where higher non-owned auto coverage could come into play.
I didn't even think about that.
Yeah.
Yeah.
So that's a good one.
Matt.
I mean, and a lot of times with your industry, again, it's always prudent to make sure it's on there.
Okay.
A lot of carriers in your industry we always double check. The
Okay.
industry where we really got to lobby for it is restaurants, right? The restaurant industry, because even if they say we don't do delivery and we use third parties now, which a lot of them do,
Right.
carriers won't include higher non-owned auto because they're like, it's not that it's like, hey, we don't believe you, but it's like, hey, the liability exposure is there for the potential that maybe you do a catering run or something and they just don't want to do it. It just gets too sticky.
Right.
But most even pizza shops anymore, they're using the Uber Eats and the DoorDash because
Yeah.
it's too expensive.
Well, even with us, I could think of a million times where we ran out of an office supply and I had to send someone down the road to Staples on company
Yeah,
time. Yeah.
yeah.
Okay. All right. What I really want to do is I want to have some time to open the floor up for questions for you, Matt. But before I do that, is there any insurance that you think these guys absolutely need to know about before we jump into questions?
Um, Let me see. I'm just going over I made a little cheat sheet list here just to make sure I touched on everything. Um, I don't think so. I mean, the only other one, depending on where your practice goes, is directors and officers insurance. I don't think any of you will need that at this point. Maybe in the future. That's where if you have, a group of leadership or board who are making specific fiduciary responsibility decisions for the company to where they need to protect themselves and their interests, right? So God forbid something happens and investors and or employees aren't happy with the decisions that were made financially, and then they could go after, the leaders of the organization. But D&O is just another one. A lot of times that's kind of coupled in with professional liability, but I think we touched on it all. Professional, the ones I really wanted to hit home on, because a lot of times, especially if you're not living and breathing it like me every day, are, the cyber and the employment practices liability insurance. Those are big ones.
I would agree based on my experience as well. Yeah. All right, you guys. Well, it's that time in our webinar where if you guys would like, please unmute yourselves and ask any question. I know you guys have to have questions because my head is always spinning after I talk to Matt. So ask away.
I may have just done a great job of just explaining everything, right?
I think you did. I think you did, but you always do. You
Well, and
always
I
do.
always say too, I mean, insurance certainly isn't, it's not sexy, right? People don't love talking about it. It's a necessary evil. You have to have it you have to have it to live under, in your house, to leave your house. Um,
Right.
so I try to make it as simple as possible. And again, I appreciate the time you guys had, as well as the opportunity, Nicole. And whether you guys use me or not, it doesn't matter. Feel free to utilize me as a resource, pick my brain anytime. I've been doing this long enough where it certainly is. It's about helping people. So I enjoy doing that.
That's the truth. John, did you have a question? Or Victor, did you have a question? I see you guys unmuted yourself.
Yes, I did have a question. So if you were to like open up, or not open up, but if you were to join a practice as a partner, should both partners have their own separate insurances, or is it okay to like come together on a policy that incorporates all the things you just spoke about?
Yeah. So, and I'm sorry, again, would you be a partner in that company?
Yes.
So yes, in most cases, because I would think if you're a partner, you would have ownership then in the LLC or the S Corp. So I'm assuming that you would at least then have a say if that partner already has like an existing business and they already have existing insurances. If you're kind of quote unquote buying into that business or becoming a partner, then yeah, you would either be involved, within that, because you're not going to have multiple policies that we talked about for the same LLC or the same business entity. But certainly if you're becoming a partner in somebody's practice, it's prudent to make sure that you have a lot of the coverages that I talked about today for sure.
Yeah, I would agree. And I would definitely look into what insurances are in place, Victor. And then Matt, correct me if I'm wrong, but even if he wanted to get a separate umbrella policy for himself, wouldn't that protect him even more? Or in
Well,
addition to the
no,
insurances that
I
are
mean,
already in place?
not necessarily. So Vic, in that instance, like the only policy that, because I look at it as like it's kind of similar to me and what I do at World Insurance. Like I essentially own my own books of business in a sense, right? I'm covered. World Insurance, I'm a partner there. I'm vested. Um, I'm covered under the policies that World Insurance provides for their employees and everything, even, general liability. We have professional and E&O coverage as well. I also maintain my own personal errors and omissions or professional coverage as Matthew Mady, right? God forbid somebody years ago that I dealt with claims that something happened or I did something. I still have myself protected for that too. So the one thing, and it's probably similar with a lot of you, right? I mean, when you get your own personal license, I'm sure you got to have your E&O, right? Or your professional liability to some degree. And a lot of times that will have a retroactive date from the day you start. Right. So you want to make sure that it would probably be prudent to maintain that policy ongoing, even if you're covered under a new, a new LLC or a new partnership type agreement. Because Vic, let's say like, hey, I'm starting this new partnership tomorrow. Great. Hey, I'm covered under their E&O and their professional starting August 20th of 2024. but you were practicing on your own for the last 5 years. Well, what happens if somebody from 2 years ago claims, hey, you were working on me for a year and now I got issues, and they're suing you for whatever, and you let that policy lapse?
That's a great point. That was a
Yeah.
great question, Vic.
And
Thank
again,
you.
Vic, I mean, if you, like I said, you could certainly, when the time comes and you're looking into that stuff, you can always lean on me, give me a shout. I'd be happy to help you out and just make sure that, you're making the right decisions, and, just making sure you're covering all the bases.
I appreciate that. Thank you so much.
And I don't know if you guys are on, I'm on LinkedIn. If you guys are on LinkedIn, definitely send a connection request. Happy to connect there. I try to post some relevant stuff on there. And that way we can stay connected through social as well.
Amazing. John, did you have a question?
Yeah, so I do mobile house call visits. So I'm in practice now, but would need to, and I pretty much don't have anything other than malpractice. But so I would have to transition everything to owning a practice when I open one, but I'm still operating now. Do these policies have, like, I guess kind of Vic's question, they were talking about a statute, if something happened from a previous practice or a previous patient, that's a completely different business structure. Is there a statute where that can follow you, or once you start new policies for that new business structure, like
You just want to, good question. You just want to make sure that the policy, so if, let's say you're writing a new policy or quoting out, if you let them know, they might include prior acts. So anytime that we're writing a new professional liability policy or E&O, even if we're taking over an existing one that somebody might have been in business for 20 years, that retroactive date is always important. We always make sure that we want to match that if it's with a new carrier and maintain that. For you, you have professional liability now, right? So what might what you would most likely do is, let's say, I don't know, 6 months from now, you open up an official LLC, right, with a business entity name. You would just add that business entity name, if you could, to your existing professional or E&O policy and say, hey, I opened up a practice. I still want to keep myself, John Gould, as a named insured, but now I want to add my practice as an additional named insured. Now that carrier, if they're willing to do that, they're probably going to want more details of the business. What's annual revenue, what's how many employees do you have, what's payroll, what's square footage of the space you occupy, because all of that are factors a lot of times in rating insurance. So they'll probably want some more information, but you could still, I have physical therapy and chiropractic clients that I do write professional for, and we have both their name and their entity's name that they've had over the course of the year still listed on there, just because it still has that retro date, and it doesn't hurt anything by keeping those named insureds on there.
okay. Great.
John, you may want to connect with Matt if you don't have professional liability as a mobile chiro at this point. So you might want to connect with him and just talk one-on-one about your specific situation.
Okay. Yeah, great.
Yeah. Christy, what's your
Hey.
question, girl?
So I have two questions. The first one is, I was under the assumption, might be completely wrong, that you did not need workers' comp insurance if you had 3 or less employees.
Oh, well, and what state are you in? You're in Florida,
We're in Florida.
right? I would have to double check. Every state is different.
Okay.
So the requirement may be different, but I don't know in Florida off the top of my head. So I'll check on that and get back to you.
And I will double check, because I may have had misinformation. Second question is, kind of wondering, I've heard some mixed messages about insuring the business entity, the building, and then also having to insure the practice and paying for that liability insurance. And I certainly don't want to double pay. So I've heard that there's a way to write a lease, like a contractual agreement, and just simply say in that lease that the liability insurance is to be paid by the building owner. That way you're not having to double pay. I don't know if that's kosher or not, but I heard that that's an option, maybe.
Well, so you're right in that you certainly don't want to double pay. I've run into instances where the landlord has the building coverage and is requiring the tenant to have the building coverage. And when we uncovered it, it wasn't a current client. They were able to go back and they actually saved money because they didn't have a triple net lease. So the landlord did have to cover the building. When
Okay.
it comes to liability insurance, look at it this way, right? If there's a claim, so let's say there's a landlord, and let's say it's a little mini strip mall of 5 different businesses, you occupy one of them. If somebody slips and falls, and let's say there's a bodily injury claim for general liability purposes, it's not up to you or I to decide who pays the claim. They're going to pull every single business owner, right, is going to be included in that lawsuit. So it is prudent for you to have your own separate general liability policy just to protect yourself, right? I would never recommend somebody rely on somebody else's policy. I mean, yes, they could name you as additional insured. So what might happen too is your landlord may require you to include them, name them as additional insured on your general liability policy, but they still have their own general liability policy, if that
Okay.
makes sense.
It does, yeah. And in this particular situation, I would be the owner of the building and then leasing it to the practice. So again, since I'm an owner in both, I don't want to pay for both liability policies. So I was kind of
So
looking for a workaround with that.
yeah, so what you could do there, and again, I always recommend too, making sure that it works with your accountant and your attorney too. So as long as there's common ownership amongst your operations, your business practice, and who owns the building, right? So if you alone own both, you can have both LLCs, the entity that owns the business and the operating entity, included on one policy.
Mm.
So you don't
Okay.
have to get separate policies, but there
Okay.
has to be common ownership. So if you own your practice outright, right, and you are the landlord, but you have 3 other partners in the building, and it's not considered commonly owned, then it doesn't meet the
Okay.
definition of common ownership. Typical common ownership definition is 80% or more. So there has
Okay.
to be 80% common.
Okay. I did get a recent quote, and it was my understanding that they were having each, the LLC and the S Corp, with their own policy. And I just didn't know if that was required. So I will reach out to you. Maybe we can talk through this a little
Yeah,
bit more in detail.
absolutely. And
Okay.
again, like I said, I always double check with sometimes accountants and attorneys might want to separate state and house and say,
Mm-hmm.
no, we need and you might need separate limits because like I said, with general liability, minimum limits are 1 million too.
Mm-hmm.
So depending on contracts, other professionals, they may say, hey, each of them needs their own policy with their own separate 1 million, 2 million limit. Whereas if they were combined on one policy, I mean, yes, we could increase it to 2 million, 4 million if you needed it, but you could combine them on both, have a 1 million, 2 million limit, and then we throw an umbrella on top of it. A cheap 1
Okay.
million, 2 million umbrella over top of it.
Okay. Thank you.
I think that's what I do.
Yeah.
I think that's what we do for me.
Yep.
Yeah. That was a great question, Christy. Anybody else? Going once.
And two, I mean, you're in Florida, so we're in New Jersey by the coast. It does. There are also challenges. So another kind of hurdle that might prevent you from putting them all in one policy. A business owner policy, like I said, is very inexpensive and could cover the operations. Property is a whole nother story. So property, especially when you're coastal, that business owner policy carrier might say, hey, we don't write anything coastal. So we can't write the property there. So that might be why then we have to get a separate policy to write the building or the property on with the GL. So there's a couple of different factors, but we can look at it a number of different ways. Ultimately, the most important thing is that you have adequate coverage at the most competitive price to accomplish what you want to do.
Amazing. All right. Does anyone else have any other questions for Matt before we wrap up our webinar today? All right. All right, Matt, thank you so much for taking time out of your busy schedule to volunteer your time to do this for our Thrive clients. And man, I appreciate you. Thank you so much.
No, thank you, everybody. I appreciate the opportunity. It was nice to meet all of you. And like I said before, don't hesitate to reach out. Happy to be a resource for you, whether you use me or not. I'm here to help.
All right, you guys, so just before we wrap up, I will make sure that everybody on this call gets Matt's information. And then Matt, when all this gets edited and everything, we'll make sure that your information is connected to that so that these guys can get in touch with you, because I know they have questions. I'm probably going to be in touch with you within the next couple weeks because now I have questions.
Awesome. Whatever you guys need, just let me know.
Amazing, amazing. All right, guys.